we had kind of a swing and a miss last week on earnings and a continuation of this sector rotation we've been seeing as well out of some of those large cap technology companies into some of the more beaten down sectors. And that did continue last week. Good for small caps, not so great for the tech growthy segment of the market. But so we'll talk more about that. But also the earnings miss was pretty bad for especially a couple of companies. I believe it was Tesla and I think Alphabet, Google. They really missed. So let's dig into some of the numbers here and see what occurred. So last week we had overall not a great week for, kind of the broad-based market. For the S&P 500 obviously was down, almost 1%. The Dow did tick up just a bit, which is a little bit more value oriented and not so tech heavy. So it did benefit there. But really the standout here is the Russell 2000, small capitalization stocks. This is worth discussing a little bit more in depth as we've talked about this, as interest rates began to rise, small capitalization companies were adversely affected way more so than large cap companies. They don't have the access to capital. They tend to have, more floating rate debt. They're more economically sensitive. And so they had really gotten beaten down. Here, as of late, over the last 3-4 weeks, my gosh, they've just been screaming forward. Let me bring up the year-to-date numbers now. It's pretty astonishing to look at this now. Now, Russell 2000, the small cap stocks are now up over 12% on the year. So they're gaining on the broad market and the Nasdaq as we speak. So again, these are companies that had gotten beaten down very badly. And now that there was light at the end of the tunnel in terms of rates, and the economy is really doing well, all things considered, we're seeing light at the end of the tunnel for small cap. Doesn't mean this rotation out of tech into other areas is going to continue forever. Certainly not. But there has certainly been a sentiment that these small cap companies are going to have their day to shine here, and that's being priced in, I think, to the market. So for all of you that do have small capitalization stocks, which are many of our clients, this is a welcome sight to see your small capitalization stocks doing well. So good for diversification, not so great for very concentrated tech portfolios. But that being said, still across the board, very good returns year to date. And again, you can see the small cap really shining now. Good news on rates too. These all ticked down last week. So, you're seeing the 30-year mortgage come back down as well. It was well over 7.3 down to 7.22. So in terms of rates, they are starting to adjust down naturally, even without the Fed taking direct action yet, which will come eventually. So as we talked about this, there was an earnings miss, so pretty disappointing there. Last week we began with positive momentum, but after Tuesday's close, two influential tech companies reported disappointing earnings. As I said, I think it was Tesla and Google. So that soured sentiment. And on Wednesday, the S&P dropped 2% and the Nasdaq fell more than 3% in one day. Really bad drops, I think the worst in quite some time. So then stocks attempted to rebound on Thursday on news that GDP grew much faster than expected in Q2, but sellers swooped in near the close and kind of soured the mood. Stocks rallied broadly on Friday after a positive inflation report. The personal consumption expenditures index, widely considered the Fed's preferred measure of inflation, showed only a slight uptick in June, and this was in line with expectations. Watch the rotation. So this is what we've been talking about, kind of the theme over the last few weeks. So this has been the narrative. Now, it'll be interesting this week with earnings on a lot of these tech companies, if this rotation is going to continue, or if we're going to see a stabilization of those mega cap companies. So we'll see. So July 26th saw the end of the third consecutive week in which the Dow led the other two averages in its fourth straight week of gains. But at the same time, the S&P and Nasdaq have been under pressure, with both posting losses for the second consecutive week. So what do we have so far in July? The Dow's up nearly 4%, the S&P is down, and the Nasdaq is off by over 2%. So that's a marked change from earlier in the year when the Nasdaq was just beating the hell out of everything else. So what is on deck this week? We have a lot of key economic data. Tuesday, FOMC meeting begins. Consumer confidence reports, Case-Shiller home price index. Wednesday, we have Treasury refunding announcement, ADP employment report. That'll be a big one to watch. Pending home sales, another one. FOMC announcement. All eyes will be on the Fed and Powell. Thursday, ISM manufacturing, jobless claims, productivity and costs, and construction spending. And Friday, employment situation and motor vehicle sales and factory orders. As you can see, this is a monster earnings week, full swing here. There are a lot of big time companies in here, including Apple. We got Intel. We've even got ExxonMobil in there. Just across the board, just Meta is in there, big time, earnings this week. So again, this is what I talked about. This is going to be important to see if these are going to hit or miss in terms of the rotation. I think you could see further rotation out of big cap, tech related stocks into other areas if these earnings just don't really hold up. So this will be interesting. We'll have to keep an eye on this. But as we do every week, we'll report back to you next week on everything we find during the week. So this is our contact information. Love to hear from you, clients, prospects, whatever your needs may be. Please give us a call or email us or find us online. Also, hit that subscribe button down below. I'd love to have you get all of our videos. And here is some light reading disclosures for you guys. And beyond that, that's all I've got. So we'll be taking an eye on things this week, folks, and we'll report back to you next week. Thanks. Have a good one.